section briefly outlines the corporate profile of 6 perusahaan Malaysia listed companies. PIE Industri Berhad operates in the industry products and services sector, providing integrated electronic manufacturing services. It was incorporated in 1997, audited by Deloitte PLT, as a 31 December financial year end, and in Sharia compliant. Allied Resources Berhad, under the industry products and services sector, is an investment holding company with multiple operations. It was incorporated in 1998, audited by Proof Malaysia PLT as a 30 April year end, while its Sharia status is not clearly disclosed. Awalan focus on property development and management, while UEM Sunrise is involved in township, high-rise, and international developments. Awalan was incorporated in 2050 and UEM Sunrise in 2008. Both are audited by Ernst & Young, have 31 December financial year ends, and are Sharia compliant. Tenaga Nasional Berhad operates in the utility sector, while Samdarbi Berhad is classified under industry products and services. Both companies are audited by PwC. Tenaga financial year and TNB financial year ends on 31 December, Samdarbi on 30 June, and both are recognized as Sharia compliant securities, although this is not disclosed in their annual reports.
Next, I will briefly explain the authorized share capital disclosure of 6 Malaysian listed companies. First, Awalan Berhad, Tenaga Nasional Berhad, and Samdarbi Berhad do not disclose authorized share capital for both 2023 and 2024. This is because the concept of authorized share capital has been abolished under the Companies Act of 2016, and shares are now issued with no par value. Next, Allied Resources Berhad is an exception. For the financial year ended 30 April 2024, the company continued to disclose an authorized share capital of 100 million divided into 100 million ordinary share and of RM1 each, with no changes from previous year. PIE Industrial Berhad does not require authorized share capital, but instead focus on issued share capital, which remain unchanged at 384 million ordinary share for both 2023 and 2024. Lastly, UEM Sunrise Berhad reports issued share capital of 4.96 billion with no changes across both financial years. Overall, this disclosure reflects the impact of Companies Act 2016 on equity reporting practice in Malaysia.
In this section, I compare the deferred tax position of several Malaysian companies for the financial year 2024, focusing on deferred tax assets, deferred tax liabilities, and their net positions. Tenaga Nasional Berhad has the largest net deferred tax liability at about 8.9 million, reflecting its capital-intensive investment in power plants and infrastructure, which will lead to substantial future tax payment. UEM Group Berhad and Samdarbi Berhad both record moderate net deferred tax liabilities. UEM shows a larger gross deferred tax asset, but still expects higher future tax outlay, while Samdarbi's smaller net liability indicates a more balanced and stable tax positions. Allied Resources Berhad and PIE Industrial Berhad have relatively small net deferred tax liabilities, reflecting their smaller scale of long-term taxable temporary differences. In contrast, Awalan Berhad reports a deferred tax asset, indicating expected future tax saving, which is common in property development companies. Overall, the differences in deferred tax positions reflect each company's industry, asset structure, and tax planning strategies.
Next, I will compare list accounting practices of Awalan Berhad, UEM Sunrise Berhad, Samdarbi Berhad, Allied Resources Berhad, PIE Industrial Berhad, and TNB Berhad under MFRS 16 leases. All companies apply MFRS 16, which requires the recognition of right-of-use assets and lease liabilities. However, the extent of disclosure differs. Large companies such as TNB, Samdarbi, and UEM provide more detailed disclosures, including exemptions for short-term and low-value leases, while smaller companies like Awalan and PIE Industrial present simpler information. For initial recognition, all companies measure lease liabilities at the present value of lease payments, using either the implicit rate or incremental borrowing rate. Subsequently, all companies depreciate ROU assets and recognize interest on the lease liabilities. The lease amount varies significantly, with TNB and Sime Darby reporting much higher balances due to their large-scale, capital-intensive operations. In conclusion, although the same standard is applied, differences arise due to company size, business nature, and materiality of leases.
In this video, I'll briefly compare how SITS company report financial asset under FAR3 and explain the reason for the difference. Avalanche Berhad and UEM Sunrise Berhad mainly measure financial asset at amortized cost because their assets are mostly trade receivable and cash from property sales, not investment. PIE Industry Berhad show higher profit volatility as it use fair value through profit or loss, mainly due to foreign exchange exposure from export activities. Unallied Resource Berhad has lower volatility because its financial assets support service operation and are mostly measured at amortized cost. Sime Darby Berhad apply multiple measurement category due to its diversified investment portfolio. Finally, Tenaga Nasional Berhad use FVOCI to ensure earnings stability from long-term strategic investment. Thank you.
In the world of finance, debt isn't just a number, it's a strategy. Looking at the latest 2024 annual reports for these 6 companies, we see vastly different approaches to financial liabilities. For Tenaga Nasional Berhad, their total liabilities sit at 147.2 billion with over 51 billion in debt. For Sime Darby Berhad, following the UMW acquisition, their total liabilities reach approximately 14 million. For UEM Berhad, they maintain a disciplined approach with 4 billion in borrowings. Avalanche Berhad, a scaling developer with 814 million in loans and borrowings. Their high leverage heavily to fund their aggressive pipeline of new projects. For PIE Industrial Berhad, remarkable for their sector, they have 56.5 million in borrowings but sit on a massive cash pile. For Unallied Resources, the most compact profile with total liabilities of roughly 60 million. In summary, TNB and Sime Darby lead in scale, UEM and Avalanche leverage for land, while PIE and Unallied stay lean and liquid.